lending actually, one of the biggest challenges is knowing how good the loans are you just booked.
Hmm.
And and we call this adverse selection when you don't get the quality that you expected. Now, sometimes you get an upside surprise. Certain conditions create that. You can get a downside surprise. And I've been getting calls, we're sitting here in April and things have changed pretty dramatically in a few short days. So I'm getting calls about what will this mean to our adverse selection? What kind of consumers will want to borrow in this environment? And of course, how do you quantify that? And if you have to quantify it first before you can do something.
Hello, everyone. Welcome again to Leaders Uncut. It's so great to have you here. And today it is my great pleasure to have with us Joe Breeden, who is the CEO of Deep Feature Analytics. And he's also the president of Model Risk Managers International. Hello, Joe. How are you doing today?
I'm good. How are you?
I'm good, except I'm losing my voice. It's the beginning of the day. I don't know why, but it must be the pollen out there. It's just blooming everywhere right now.
Yeah, yeah. I keep my tea handy, so I'm
Hey,
I'm
there we
covered.
go. See, I forgot to take my tea today. I've been anyway. So Joe, I can't wait for you to talk about, of course, your background, but explain what you're doing with deep feature analytics because I think you have an edge here that most people don't have, and you're making a big difference also in the future in the world of AI, in how businesses evolve, embracing technology, and a lot of other elements that are critical as part of their decision making. So, if you wouldn't mind starting by talking about your background, I think that'd be a
Mhm.
great start, and then we can elaborate more on what you're doing with your company.
Well, thank you. I was originally a physicist, and that's been some time ago. At the time, I was studying numerical methods for analyzing chaotic systems, especially in astrophysics. Everything I was doing then is called machine learning now. So it all comes back around. I was, after graduating sometime later, I was hired into a think tank that Citibank created with Los Alamos National Lab. And because of that, I spent the next couple decades at countries in crisis, South America, 95, 96, Southeast Asia, Thailand, Malaysia, Indonesia, Singapore, 97, 98, the Greek debt crisis, Hong Kong SARS recession in 2002, remotely, fortunately.
Mm,
And,
yeah.
things like that. And, figuring out how to do analytics through a crisis, how to be helpful and useful. And along the way, we had developed, and I think we can take some credit for being the first to develop analytical methods for vintage analysis, vintage-based forecasting, and it worked very well for us from 2006 through 2010, 2011, the global financial crisis.
Hmm.
But we learned that um, predicting wasn't enough. We had to move upstream and help people make better lending decisions, underwriting decisions, pricing decisions.
Right.
And so when we founded Deep Future Analytics in 2011, specifically the goal was to change the pricing optimization approach because the way that's done today is, well, even still, most people are plugging in backward looking prepayment rates, default rates, running some cash flows, and they're not really integrated with credit scores. So, I don't want to get too deep into things we might talk about, but we wanted to integrate all of this so that you could have account levels, scenario based
Mm,
cash flows, and pricing optimization. And then that's been one. I would say today that's a one division of our company.
okay.
It's still one of our leading activities, and we're building towards a certain goal related to AI that I can talk about. But on the other side, we've also been doing model risk management, model validation, things like that. And most recently, we've been asked repeatedly how to monitor generative AI. And so we now have a product and a division, which is AI Monitor. uh,
course.
basically how to do generative AI oversight.
Of
So,
course. I mean, that is critical. You had to address that. So tell me about your core audience. You're working
mhm.
with banks, you're working with financial institutions mostly. Can you address that?
Yeah, we have historically mostly worked with um, lenders, whether it's banks, credit unions, finance companies. In fact, um, my team will often groan about the lack of data or scrambled nature of the data that we receive. It's
Mm,
like, well, if it was easy, they wouldn't call us.
mm,
Um, and so we get a lot of calls from new portfolios, as you get with fintechs, where you have to bring a lot of domain knowledge to get an idea of where things are headed. And we have a shared data pool that can augment some of the analysis.
understood. So I imagine, of course, modeling properly is going to be critical. It's going to, however, change very quickly because we are overwhelmed now with new tech, which obviously has an impact on our society, on the economy, on our environment. How are you expecting to address all of this? Because people, I think, are going to need this type of expertise more and more, and we are required to have answers pretty quickly. Is that correct?
Yes, it is true. Now, lending actually, one of the biggest challenges is knowing how good the loans are you just booked.
Mm-hmm.
And and we call this adverse selection when you don't get the quality that you expected. Now, sometimes you get an upside surprise. Certain conditions create that. You can get a downside surprise. And I've been getting calls, we're sitting here in April and things have changed pretty dramatically in a few short days. So I'm getting calls about what will this mean to our adverse selection? What kind of consumers will want to borrow in this environment? And of course, how do you quantify that? And if you have to quantify it first before you can do something about it. What comes next?
Mm-hmm.
Pricing, future actions, etc. comes next.
Yeah, so how do you foresee the future? How do you foresee the future of banking? I mean, it's hard right now because there's so much coming at us, but it looks like the world is changing in a way probably more drastic than ever before, although the world has always changed. But I think people are faced now with a lot of uncertainty, a lot of anxiety. We are forced to evolve and to pivot a lot faster than before. So when companies come to you, banks, financial institutions come to you and ask you to guide them in their evolution, where do you start? What's the process?
Well, I think it's fair to say I've always been passionate about forecasting.
Mm-hmm.
I'm fascinated by the future. And my the books I loved most when I was younger, Foundation series, Dune. I mean, this is no surprise with people with my background, but just the vision of the future. And so when you have data, you do your best to make near-term forecasts. What we have always specialized in was long-term forecasting, which is why it's called deep future analytics.
Right.
And sometimes you don't yet have models and you're doing a lot more speculative prediction. What do
Mm-hmm.
we think is going to happen? It's true that I've been in this industry now 30 years.
Mm-hmm.
And based on that, I and those like myself do know more than what the data shows because we've seen cycles for which the data is long since lost, but I remember. And so what can we guess is going to come next? And with AI, it goes even beyond that. And that's where I've written several articles on things related to AI ethics, the AI control problem, which is definitely long distance speculative.
Mm-hmm.
But yeah, so in this current environment, forecasting is all about what happens in the next year to start with, and then where do we go from there?
True, you have to think short term, adapt short term, and all of it is a science. I mean, you're a chief scientist. You are what I call a geek, right? A geek in the planning, the forecasting. I mean, when I first met you, I said, "Is that Steve Jobs? Is he back? Is he reincarnated here?" You look just like Steve Jobs. So I love that. I mean, that creates right away level of trust. It's really interesting how that happens. But it is a science. It is a science where you have to use historical data. You have to take into consideration the current economic situation. You have to think in a matter of future now, short term. I always call myself a near futurist. The future cannot now be projected in the long term because of the fact that it's changing so fast. So what's the biggest lesson here in terms of science that you would be able to share?
The best work comes from questioning your own methods, from when a problem comes, step back and say, can I really do what I've always been doing to solve this problem? And I see that a lot, where people come with machine learning AI methods that they learned in school, that they learned at some other institution. It's tempting to download the latest library and APIs from Google, Meta, you name it, and say, and now I've got some banking data, let's apply those.
Yeah.
Well, banking data is unique because the long driver is the economic cycle, and the credit cycle is roughly synchronized interest rates. So it's a little shorter cycle, but still long. Those methods of machine learning, the way Google uses them, don't apply out of the box to what we do.
Mm.
It's asking those hard questions, stepping back and saying, how do I work with what I have? And in fact, I guess I recently had a difference of opinion with someone who was definitely applying machine learning out of the box. And I was saying, wait a minute, we don't have that data. You've got a few data points on an economic cycle. If you're not also incorporating expert judgment, then you don't really have a long-term view of the future.
Yeah, well, that's so critical. I mean, because right now people are scared. We think AI is going to take over our jobs. Everything's going to be controlled by AI. Soon humans won't have anything to do. And that's the one thing I'd love you to talk about, because I think humans will always be needed because of the humanity in itself, by itself. Some things that robots will never be able to emulate. Robots will never have a soul. There's so much attached to the soul, our spirits, but the basic roots of humanity will have value going forward and forever. What's your point of view on that?
Well, I'll answer a nearer question first, like over the next 5 years. Which is that everything we've been building, we try to make all of our analytics integrate, whether it's loss and prepayment forecasting, stress testing, cash flows, pricing optimization, institution optimization. All these things are analytically integrated because we are building our way towards simulating an entire institution and even simulating them in competition. The paradigm that I think is inspirational for all of us was AlphaGo, the way you could teach the algorithm to compete effectively through self-competition and simulation. And so our roadmap leads to a strategic recommendation agent, which can run simulations in the background of an institution and then come to the executive team, perhaps with a large language model doing the communication, and say, hey, here are some recommendations we have for you. But you're exactly right that that's where it has to end. It has to end at the recommendations, because I already know. You can tell some institutions, hey, there's a demographic group that's not price sensitive, which means you can set the pricing however you think you need to, and they're going to pay it. Now, I'm happy that a number of my clients have said, well, we don't want to do that. We're not out to exploit any certain demographic because we can. We're looking at how to be fair across various groups. And so we want to make sure that we are profitable, not that we're exploitive.
Right.
And that's, to me, that's banking ethics. Now,
Yes.
not every group views that the same way, and different institutions have their own definitions. But the AI does not have those definitions. And so That may be an extreme example. There are a lot more subtle examples where someone says, that's just not my business plan. I would like to lean this way.
Mhm.
Great. That's what the human is in charge of.
Right.
The AI's job is to offer suggestions.
Yeah, that's exactly. It's a tool. It's just like the internet. It's a tool that we are supposed to be using, but we have to remember that these are suggestions that need to be evolved and evaluated within certain context, because a lot of times it's all about the context.
Mhm.
Yeah.
Yeah.
Can you talk about price optimization? It's a subject matter that's always been very interesting for me. I've had clients that have been doing this, and it's always a challenge when you have to optimize your pricing so that you're still very profitable, yet you're competitive. And that's also an area that is changing all the time because prices change
Mhm.
all the time. And it's one areas of your expertise as well, right?
Yeah. Yeah. I think it's critical. To me, it's the problem that few organizations have solved effectively. Now, it's also hard to communicate because it's easy to stand up a pricing optimization tool that works in general.
Yeah.
There are, the industry is full of these things. You can talk about price optimization on grocery store shelves. Um, but in our pricing optimization, we look at the difference. Let's say you had a 1% loss rate on some personal loans. Well, do those defaults come in the first few months of a loan, or do they come in the last few months of a loan?
Mm.
That 1% is not the answer I need. I need to know how it's spread, because if it comes in the beginning, I lose a lot. If it comes in the end, I've already made my money as a lender and I don't care so much.
Mm.
That is all. I'm not aware of any pricing optimization that embeds things like that the way we do. So our goal is to be analytically rigorous so that we capture these subtle effects, which really determine your ultimate profitability. It's hard to explain that sometimes.
It's a very delicate subject. When I first was involved in this, first of all, never anyone told me about the timing. That's the
Mhm.
first time I'm hearing this. So I think it makes sense. It's totally critical that to organize things at the right time because it changes everything in your profitability, in your income, in your success. So that's very interesting. And in is that also linked to risk? I mean, how does that work?
Yes, because the timing is both default timing and prepayment timing. Everything we do is a competing risk framework where there are multiple outcomes when you're talking about lending. And it's it's the timing of these things, it's the economic scenarios. You have
Mm.
to understand, here's my optimal pricing, but I have some uncertainty around that. And so if you're looking at this at the account level, and actually this is a good conversation for those who are doing machine learning, because
Yeah.
um, the uncertainty is not uniform. I can take two consumers where I say the optimal price is the same for both of them. On this one, I'm confident of what the ultimate outcome will be. On this one, not so much.
Mhm.
So even though I come up with the same answer, it doesn't mean I want to give them the same product because there's a lot of uncertainty over here. And I mentioned machine learning because as we've moved from regression models, kind of a linear concept of the world where the uncertainty is kind of uniform across our decision space, to machine learning, where I think one of the best definitions of machine learning is an algorithm that finds pockets of predictability. In a
Mm.
very high dimensional space, it finds certain places where you really know what's happening, and that's where you make your money.
Mm.
And a lot of other places where you really don't know and you need to back off. And so if you're not considering uncertainty in your underwriting and your profitability decisions, then you're at least missing an opportunity.
Yeah.
As the gamblers would say, you're missing a bet
Yeah.
if you don't know the uncertainty of your forecast.
Right. So your software, your all-in-one modeling software, incorporates all these components, right? That are, of course, critical in coming out with the right recommendations.
And that's why it's taken us 10 years. Uh,
Yes. I mean, I can only imagine how complex that is. Yes.
we have a very rich library. Now, the goal is not to over engineer. Nobody wants things that can't be understood. But what is the sweet spot? How much do you have to bring to bear for a certain problem. Um, if you're too simplistic, if we're doing old school credit scores, it's not going to integrate with cash flows. It's not going to give you what you need for profitability. You need more than that. But I often don't need fancy machine learning and AI if I'm just using bureau data and it's more or less a linear problem already.
Right, right.
So we don't want to get carried away.
Yeah,
We want
for
to put,
sure.
yeah.
So what's the process if someone is interested in working with you? Where do you start? Do they have to get your software? I mean, what's the timeline there?
The key to success is to start by asking what problem they're trying to solve.
Mm.
What do they want to do? Um, I've had people buy our software, license our software that does all these things, but they didn't actually come to it with a problem in mind.
Mm.
And and so it just doesn't get engaged because if nobody is trying to solve a problem, they don't know what to do. Um, but if you start somewhere, um, we've got 300 CISO clients, IFRS 9 clients globally, and that's a clear starting point. I need a loss reserve. Great. We put set them up for loss forecasting. Stress testing goes naturally with that, with our kind of models. And then folks will say, as they start to learn about it, we'll be talking about adverse selection, the residual risk they're booking. Oh, well, how does that relate to my yields? What do I need to do on pricing? So it can naturally expand that way if that's what they want.
Yeah.
So we treat it as modules and expand as needed.
Okay. And you just mentioned that you provide services on a global scale.
We do. And in some markets, we have local partners. But anybody who drops me a note, I'm happy to work with them. So we have always been international, just as you heard about my background.
Yeah. Yeah.
Um, Banking is global.
Banking,
Um,
yeah, banking is global. So what do you say to people who are afraid of the evolution of banking, the future of banking, especially considering cryptocurrency, all these new ways of exchanging monetary values? What do you see how's going to be the landscape here? What do you foresee?
well, cryptocurrency, um, for the most part, it's not a currency yet. I mean, it might become a currency, and stable coins are a quick way to exchange something that is a currency. So there are people who are working on this. All the things I've talked about, it doesn't really matter.
Mm.
Now, you can have an exchange rate. And in fact, my very first project, 1995 in Argentina, the banks there run parallel accounts. At the time, at least, it was a peso account and a dollar account. And the consumer could decide, am I depositing dollars or pesos? Am I extracting dollars or pesos? And
Mhm.
they could do exchange between them because it was such a dynamic environment.
Right.
I imagine crypto being like that,
Mm.
where the exchange rate, I mean, I'm always amused when people describe cryptocurrency as somehow being stable because the price is so volatile. I would not want my paycheck to come home in a currency that could drop by 5% tomorrow, or that's different. That's an investment. That's not my cash to go
Yeah.
buy groceries, right? So they're different accounts, really.
Do you think, though, that crypto will eventually stabilize in the future?
Well, it has to be tied to something. I mean, it has to. Um, Now, US dollar is tied to the safety and soundness of the US government, whatever that's worth.
Right.
But you do want a means of exchange that has a more stable value than what we've seen. And will it stabilize? Well, perhaps. I don't know.
Mhm.
That's I tend not to speculate on the markets a lot.
Mhm.
I have worked in that space before, but
Yeah.
I understand that that's not the same as the lending that we work in today.
Yeah, no, I understand, but it's a question that a lot of people have because we hear so often now the value of the dollar is going down the drain. That's how much is our money going to be worth? And that's a really critical question that I think we have to ask ourselves now, because especially in uncertain times, we have a tendency to rely on the safety of the money that we have saved to be able to sleep at night. But yet right now it seems like it's all questioned. It's uncertain. It's not what it used to be. What would you say to people who think this way?
Well, if you think about a dollar domestically, the uncertainty in that value is inflation. And so the concern is, will inflation be 2.5 this year, 3.5, 4.5? Depends on what happens with tariffs because they directly translate to inflation.
Right.
If you had deflation, you'd be talking about maybe -1. Um, that's not a lot of variation when it comes to, well, I mean, that's overall average, and I don't want to
Mm,
dismiss the impact it has, especially on low income people, where what might look like 2% could translate more to 10 or 20%. It can be severe, but it's not cryptocurrency type volatility. Now, if you're traveling internationally, as I do, in a couple of weeks, I'll be speaking at a conference in Bangkok, and then a week after that, I'll be speaking in Zurich, and I'm very much aware of the exchange rate.
right.
There, the exchange rate variation can be plus or minus 30%.
Mm,
Um, we know how much cryptocurrency has gone up. We know how much it's come down this year. These are large numbers. So it's not yet as stable as something like the dollar is. Um, if it becomes that stable, then it can be used as a means of exchange. But I only bear the exchange rate risk when I go overseas. With cryptocurrency, I bear it domestically every day. So that's a
mm.
different world.
It is a
Um,
different world, and I think education is critical when we are not sure about what to do with our money. It's staying educated and staying educated on an ongoing basis because things change so quickly right now.
mhm.
Yeah. So wonderful. So we've talked about your background, what you're doing with your company, the overall landscape. I always ask my guests at the end of our conversation to share a story of resilience, challenges you had to overcome in your life, what you learned from them. What would that be for you?
Um, in my previous company, um, I remember talking to an investor uh, who, well, I have to say, well, you told me to be aware of this question, and I forgot to think about it.
That's okay. It's
But I'll tell you what comes to mind,
yeah.
which is that we showed a potential investor our portfolio, and he looked at our history of the previous 5 years and said, "Wow, that's a hell of a bungee jump." Boing, 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 and it's kind of always that way. Um, I feel like in business school, you hear two extremes. You hear the rocket ship, they love to do case studies of Facebook and things like this. And you hear the disaster stories, the Enrons, people did everything wrong. But, very few people are in those worlds. That's not my life. Um, Most small business owners will tell you that it's just the day-to-day struggle of making things work, finding your niche, building to something better. And it was some years ago, I can't remember who she was, but there was a CEO who, I think she had written this, that when people asked um, how to succeed in business, and she said, every day you figure out the problem that is most in need of solving and needs to be solved today, and you solve that problem. And if you solve another problem every day, you stay in business. Um, and if you're, and I would expand that to say, as long as you're at the table, I worked for a few years for professional gamblers in Las Vegas.
Mm,
And so gambling analogies come from personal experience, but you can't win if you're not at the table. So you keep solving problems, and I treat our product suite as a pipeline. Another thing, the standard business school wisdom of put everything you've got behind one product. Well, that's what the rocket launch companies look like because that one product was great.
mhm,
That's not true for most of us.
mm.
We may have the great product, but the market's not ready for it. It's not quite right. There's always something to work on, and you spend years refining and adjusting and trying new products. And our AI monitor rather new product from the rest of what we've done, but a lot of excitement about that because it's definitely needed. So we keep that pipeline so that we keep giving things a try, testing, looking for that thing that's going to succeed. And so the hurdles to overcome are every day.
Yeah.
Sometimes it's finances, sometimes it's client issues, sometimes it's software issues. It's just there's always something every day, and some of them keep you up at night, but I'm a big believer in sleep. I try to shut those things down and get some sleep, start up the next day, and just stay in the game.
Yeah, that's so true. And stay in the game. That's the key. You have to have balance as well. You cannot
Yeah.
constantly think you have to be behind your computer in order to succeed. You have to have balance. A lot of people give up because they are overwhelmed, they get burnt out, and they just can't keep going. And it's also very important to stay curious and thirsty and passionate and have a positive attitude, because it's not supposed to be easy anyway. If it were, everybody would do it. This is why so many people fail. It's a challenge, it's a roller coaster. I always say it's not a sprint, it's a marathon, and you have to have resilience. You have to have mental and physical resilience, and also surround yourself with positive people, because that has an influence on you as well.
Yeah. I have learned basically I've only ever worked in startup companies, and whether as the primary founder or a junior founder in the beginning, this is my fourth or fifth, depending on how you count. And yes, uh, successful founders are optimists. Um, you can't be a pessimist and run a startup company because things will go wrong every day. Um, and so, and as I mean, if you aren't that optimistic, get a job. You can do well.
That's right. I think Steve Jobs was the one who said also you have to be a little bit crazy, right?
Yeah, yeah. And to that point, that was going to be my second point, which is you have to like the lifestyle.
Mm.
Um, it's we were I was doing a big project with a large consulting firm for a large financial institution, and I was running a very large team that they'd put together. I can't give any details about any of this, um, but what I can tell you was that we had uncovered things that were going to create waves, and it was a big deal with a lot of executives and who was going to deliver this really terrible news. And the senior guy from the consulting firm who brought us all in, he looked at me and was like, Joe will explain it. He can stay calm through a nuclear blast.
Yes.
And that's about what it takes
That's
because those
about
things
what it
happen.
takes. Stay calm in the middle of the storm. I know whatever happens. Yes.
Yeah.
I think it's also a quality that's not always innate for everyone, but it's something that you work on.
Yeah. I
Yeah.
wouldn't say I was born that way.
That's right. Wonderful. Well, thank you so much, Joe. It was so great to have you today and speak about what you're doing with deep future analytics, how you really help people manage risks and improve profits in those times of uncertainties, which is a challenge for everyone.
Absolutely. Thank
Yeah.
you for having me.
Yeah, I appreciate it. Thank you everyone for watching. Please share this video with your audience. I do the same, but I need, like we say, we need a city to make things happen. And I need your help to spread the word and share this video of Joe and what he's doing with his company, because it can be critical for certain businesses, including, of course, banks, financial institutions, to potentially get hold of Joe and speak with him and understand what he is doing and the value that he can bring to their business and to your business. So I count on you to share what we're doing here, share this video. That would be very much appreciated. And remember to subscribe to the channel. I would appreciate that as well. And we will see you next time.